What if I told you that the biggest financial moments for UK pensioners this year haven't happened yet? While many videos focus on changes that are already behind us, the next few months could have a much bigger impact on your finances. And what you do during July and August could make the difference between being prepared or being caught by surprise. Welcome to Pension and Benefits Guide, your trusted source for clear and practical updates on UK pensions and benefits. If you want to stay informed before important changes happen, you're in the right place. Today, we're looking at the 3 biggest financial events arriving between September and January, why they matter, and the simple steps you can take now to put yourself in the best possible position before they arrive. Let's begin with the state pension triple lock. Although the official triple lock figure won't be announced until October, the economic data that determines it is being shaped right now. The triple lock works by increasing the state pension each April by whichever is highest: September's CPI inflation, average wage growth measured between May and July, or 2.5%. The wage growth figures will be published in September, and September's inflation figure will be published in October. Once both are available, the government announces how much the state pension will increase from April 2027. So why does July matter? Because the wage growth data is being collected now, and the inflation trend is being influenced by energy prices, food costs, and decisions made by the Bank of England. Every major economic development between now and September could affect the increase you'll receive next April. Current forecasts suggest that the Bank of England may hold interest rates at 3.75% through the rest of 2026. At the same time, some analysts, including MoneyWeek, have warned that inflation could reach around 6% or even higher by early 2027, largely because of energy costs. If September's CPI inflation comes in at 4% and wage growth also remains at 4% or higher, the triple lock would deliver a 4% increase. That would add roughly £9.65 per week to the full new state pension. If inflation reached 6%, the increase could be around £14.48 per week. But here's the important part many people overlook. Those increases apply to your actual state pension, not automatically to the maximum amount. If you're currently receiving £200 per week instead of the full new state pension of £241.30 per week, then a 4% increase would add around £8 per week, not £9.65. That's why it's worth checking exactly what you're entitled to. Log into your personal tax account on gov.uk and look at your state pension forecast. Knowing your current amount helps you understand what any future increase could actually mean for you. While you're there, check your national insurance record too. If you have gaps, remember that the opportunity to fill the 2020 to 21 tax year closes permanently in April 2027. Every month that passes brings that deadline closer. It's also worth considering whether any income changes you're planning could affect your tax position once the state pension increases. Being prepared now means fewer surprises when the official announcement arrives in October. If you're finding this information useful, take a moment to like this video, subscribe to Pension and Benefits Guide, and share it with someone who receives the state pension. These updates are most valuable before deadlines arrive, not after they've passed. Now let's move to the second event, and this one could have a direct impact on your finances this winter. The qualifying week for the 2026-27 winter fuel payment falls between the 21st and the 27th of September, 2026. To receive the payment automatically later in the year, you must already be receiving pension credit or another qualifying means-tested benefit during that specific week. Simply applying isn't enough. Waiting for a decision isn't enough. You need to be in payment during the qualifying period. This is where timing becomes critical. Pension credit applications currently take around 6 to 8 weeks to process. Working backwards from the qualifying week means that around the 26th of July is the last realistic time to submit a claim if you want a reasonable chance of receiving pension credit before that September deadline. Missing that window could mean missing valuable support. For a single pensioner, the winter fuel payment is worth £200. For someone born before September 1946, it's worth £300. But that's only part of the picture. Receiving pension credit can also unlock additional support, including council tax reduction, the warm home discount worth £150 off your energy bill, and cold weather payments of £25 for each qualifying week of severe cold. Taken together, a successful pension credit claim could provide well over £1,000 in support during the winter. A claim made this week may also be backdated by up to 3 months, meaning it could recover payments going back to April. However, waiting until August could significantly reduce the chances of qualifying in time for the September week, while waiting until October would definitely miss it. If your weekly income is below £218.15 as a single pensioner, or below £332.95 as a couple, you may be entitled to pension credit. If you think you could qualify, this isn't something to leave until later. The processing time means acting sooner gives you the best chance. Now let's look at the third event, which has another important deadline. On the 26th of August, Ofgem will announce the energy price cap for October to December 2026. That announcement will determine what many households pay for gas and electricity during autumn and into winter. But here's where the real impact becomes clear. By the time the new price cap is announced, many of the most competitive fixed-rate energy deals may already have disappeared. Energy suppliers often release their strongest fixed tariffs before a price cap announcement, when competition for customers is highest. After the announcement, the market adjusts quickly. If the new cap is higher than expected, attractive fixed deals can disappear fast because demand increases. If the cap is lower than expected, suppliers may withdraw or reprice their offers. Either way, your choices often become more limited after the announcement. At the moment, the current energy price cap for a typical household stands at £1,862 following the July increase. Forecasts indicate that wholesale energy prices remain volatile because of ongoing global uncertainty. No one knows exactly where October's price cap will land. And that's precisely why many people choose to review their options before the announcement rather than after it. If you're considering a fixed tariff, compare the options currently available for your postcode using a price comparison website such as Money Supermarket or Uswitch. You'll usually need your annual energy usage in kilowatt-hours, which can be found on a recent energy bill. A fixed tariff locks in your unit rates regardless of what happened with the October announcement. If prices rise, you're protected. If prices fall, the difference may be relatively small, and for many people living on a fixed income, having certainty is often just as valuable. The comparison only takes around 20 minutes, but the potential savings over a year could be several £100s. So let's quickly bring everything together. The triple lock announcement comes in October, but now is the time to check your state pension forecast, review your national insurance record, and understand how any increase could affect your own payments. The winter fuel payment qualifying week falls between the 21st and 27th of September. If you may qualify for pension credit and haven't yet applied, remember that processing times mean acting sooner gives you the best chance of being in payment before that important week. And before the energy price cap is announced on the 26th of August, it's worth comparing available fixed-rate energy tariffs while the widest range of deals is still available. These are 3 separate events, but they all have one thing in common. The best time to prepare is before the deadlines arrive. If you found this video helpful, let us know in the comments which of these 3 updates is most relevant to you. Your experience could also help other viewers. Don't forget to like, subscribe to Pension and Benefits Guide, and share this video with a friend or family member who receives the state pension or files a tax return. Thanks for watching, and be sure to check out our next video, where we'll continue bringing you practical updates to help you stay informed and make the most of the support available.